Welcome back to Squawk on the Street. Anthropic is now worth more than OpenAI, according to the financing for Anthropic's latest Series H funding round. The deal pushing Anthropic to a post-money valuation of $965 billion. Altimeter Capital leading the investment alongside Dragoneer, Green Oaks, and Sequoia Capital. It is now Altimeter's biggest investment to date. And joining us now in a CNBC exclusive is Pauline Yang, partner at Altimeter Capital, who led this round. Pauline, thank you so much for joining us today. You know, it's crazy that only in February of this year, Anthropic was valued in around at $380 billion, and now we're almost at $1 trillion. How did that happen?
Yeah, first of all, it's great to be here. Thank you so much for having me, Sarah. It's a big headline number, but I think what's missing is kind of, if you look at the revenue growth that has happened from the beginning of the year till today, when the $380 billion round happened, which we were also a part of, the company was sitting around $9 billion of run rate revenue. If you look at the same valuation today at $965, the company announced that they are at $47 billion of run rate revenue. So actually, the revenue multiple for this round is actually cheaper than the last round, sitting around 20x. And so while it's a big headline number, we think that the growth certainly justifies the valuation.
Why did the company do a fundraising round right now, as it's reportedly on the brink of an IPO?
Yeah, I think certainly, you know, the investors, we were clamoring to put money in. And I think that while, you know, the rumored IPO timeline is on October, I think certainly investors would tell the company that if you can raise, go raise. And while, you know, the company, I think there's a lot of operating leverage in the company that the company is seeing, certainly more cash and a stronger balance sheet never hurts.
Right. I guess if you can get it, they have plenty of demand. That's what's driving it. Pauline, you guys also have a stake, I believe, in OpenAI, right? This is the biggest now in Anthropic. Right. But if this raises the stakes in the battle between the two, with Anthropic now getting a bigger valuation, how do you see that competition playing out? And can both be winners?
First and foremost, we think this is the largest TAM and market that we've ever seen in multiple generations. And so certainly we absolutely believe that there can be multiple winners. If you look at its super cycles over the last few years, the internet, the mobile, now AI infra, those have each generated a $5 trillion company. So we absolutely believe that both Anthropic and OpenAI can be multi-trillion-dollar winners over the course of time.
One, though, has clearly outpaced the other when it comes to revenue growth over, let's call it, the last 6 months, though, Pauline, and that would be Anthropic. Perhaps not seeing the focus on the enterprise. They seem to be rewarded for that. Do you anticipate that revenue growth will continue to outpace that of OpenAI over time?
I think that both companies are certainly now, you know, targeting the enterprise, certainly that enterprises are willing to pay for frontier models that Anthropic and OpenAI are offering. And so we think that both of these can continue to grow very nicely. But certainly in the first 5 months of the year, Anthropic has executed with their product velocity. And so we've seen that growth, but we don't count OpenAI or Google or SpaceX out either.
And more broadly speaking, when you think about the diffusion of AI into the enterprise, and we watch the growth of the agentic era, so to speak, in inference, but we're also seeing enormous compute costs mount for so many companies as they try to understand what they're spending and what efficiencies they're getting. You know, how do you view that curve? Is it just going to continue unabated and sort of exponential?
Yeah, I think AI is going to follow the trend of the cloud, right? So if you think about the customers adopting cloud, there were periods of expansion and then there were periods of optimization. And the expansion is coming from more use cases, higher speed, and then you have optimization where companies say, you know, we're spending a lot, let's go and optimize. We strongly believe that we're still in an expansionary period. Anthropic Chief Financial Officer provided this data point that the company's net retention rate is over 500%, right? And so we think that we believe we're strongly in this expansionary period. And I think as better models come out, they're more capable at doing new use cases, which will again drive that expansionary spend.
There's also the discussion of how corporates are thinking about their IT budget relative to their headcount or their comp budget, and whether or not you think hiring plans will markedly change as we work into the back half of the year and start planning for 27. You think that we're going to see inflections on those fronts?
I think if you look at coding, what we've seen is that actually AI has driven talent to be more productive, right? And certainly, while maybe companies aren't adding new engineers, those engineers are driving more code, productive code into their code bases. And I think if you look at outside of coding, I think one big expansionary thing that has happened for Anthropic is that customers are now deploying agents in non-coding, right, across legal, across finance, across tax. And so I think all of those things, as you think about the IT budget and hiring budget, that will continue to grow both as long as agentic adoption continues to grow, which we think it will.
But on that point, as an investor, Pauline, I wonder how do you worry or think about the churn risk of these companies as they use different models and as the models become interchangeable?
I think that over the last few months, we've seen that models certainly can be swapped in or out. But I think what we've seen over the last 6 months is that the harness, right, the product that sits on top of the models drives stickiness, right? If you think about the workflows that are being automated within the enterprises, if you think about the integrations, right, the integrations with Salesforce or HubSpot or whatever the connectors are, and the habit and the context that these models have, I think all of that drives incredible stickiness amongst the enterprise.
Yeah, there is a notion that if your IT budget is, say, a certain percentage of your overall spend, right, that if you're seeing productivity gains, it kind of blows through that cap and works its way into sort of regular line of business operating expense, which would argue for a freer will to spend.
That's exactly right. When we refreshed our customer work for this round, what we saw is exactly that first, that the AI budgets are much more like IT budgets now, and the line of businesses still don't have, these dedicated AI budgets. But again, as more of agents get deployed in non-coding in the lines of businesses, we think that will continue to drive growth for both of these companies.
Pauline, looking at your public holdings, of course, you, like so many other firms, NVIDIA is certainly right up there, the largest, in terms of percentage. And I'm curious how you view that company at this point, or whether you can speak to it. The stock is up 16% for the year. Not bad, but certainly nothing like the performance we've seen from so many other names, some of which you own as well. And yet it would seem so much of this is still focused on what they're doing at NVIDIA. Is it mispriced?
We're very, very bullish on NVIDIA. If you think about kind of the what Anthropic has been really focused on in the last 6 months, it's getting more compute, right? Whether that's through Amazon and through Google and NVIDIA, right? NVIDIA is now a key partner for Anthropic. And certainly, the compute shortage continues to be a story that both Anthropic and OpenAI have to wrestle with, right? Which is there's so much usage that the reliability, there's room for improvement on the reliability. And so we're very excited about NVIDIA. And certainly I think if you believe, which we do, that inference is going to continue to grow on this exponential as more use cases get unlocked, we need more compute. And NVIDIA is very, very well positioned in that market.
I just had a few more on just this Anthropic round. Did you consider at all the supply chain risk designation from the U.S. government on Anthropic, and whether down the road, if that continues and they don't win in court, that will be a bigger problem?
Certainly that's a risk, but what we've seen more recently is actually that, particularly with the release or working with the Mythos model, right, the administration has been much more open to working with and continuing to partner with Anthropic. Now, certainly we believe that the Department of War will work with other models. But again, there's such a massive opportunity that we think that Anthropic will continue to grow through it, and the White House will continue to be a key partner for the company.
And finally, just what are your assumptions about growth, revenue growth and margin growth, given this nearly $1 trillion valuation?
The first few months, the company has 5x'd in run rate revenue. Certainly, we are not projecting that through the rest of the year, but we do think that the company will continue to add incremental ARR every month and continue to grow. And then on the margin side, on the gross margin side, the inference costs continue to come down as Anthropic continues to drive compute efficiency across a heterogeneous base of chips, for example, and also algorithmic improvements. And on the operating leverage side, $47 billion run rate with 3,000 employees or so. That is efficiency that is just unheard of. And so, we think that this company continued to drive very attractive margins, both on the gross margin and on the operating margin side.
Do they have enough compute? I mean, OpenAI would say they're spending the most on compute, and that's their competitive edge.
At this moment, certainly not. I think, you saw that Anthropic did a deal with SpaceX to lease both Colossus 1 and Colossus 2 compute. And so I think that's a very strong signal that the company is certainly able to take on more compute and deploy it efficiently to customers. And certainly we think that if you look at the growth that we're projecting for this year and next year and the next 5 years, we will continue to need to build out data centers and build out our compute base.
Well, Pauline, one of the huge stories of the moment. Thank you for joining us and taking all the questions. Pauline Yang, a partner of Altimeter Capital, which led the Series H round, valuing Anthropic at almost $1 trillion. It's crazy. Thank you, Pauline.